The most recent labor market data do send, to your point, a pretty clear signal that labor market conditions have cooled considerably compared to where they were 2 years ago. This is no longer an overheated economy. I think the upshot of that really is that we're well aware that we now face two-sided risks and have for some time. We know that if we move too quickly, we risk unnecessarily hampering economic activity and possibly interfering with the ongoing expansion. We know that if we move too slowly, that we may undo the good we've done. Well, actually, it's the other way. If we loosen policy too late or too little, we could hurt economic activity. If we loosen policy too much or too soon, then we could undermine the progress on inflation. So we're very much balancing those two risks, and that's really the essence of what we're thinking about these days.
Has the Fed just F everything up? Has Jerome Powell just announced a possible recession if they don't cut rates? This is what he said in Congress. He said that if they move too slowly or cut rates too little, it can be bad for the economy. It can just destroy everything that they worked for in the past more than 1 year. So we are in a very tough situation. And if you also look at the election, again, things are not looking good because Trump is leading, because Biden is not in his right mind right now and he doesn't want to quit. So it's a very tough situation. And going back to the Fed, I think we may face something similar to the 2008 situation when we had a recession. Why? Because as it seems, the Fed is not looking to cut rates yet, even though he mentioned that it may get dangerous. This opened the possibility for a rate cut in September, which has a high probability if you're looking at the statistics. So maybe we can get a rate cut in September, but will that be enough? Will the job market continue to go sideways? We are at 4.1% unemployment rate right now. 4% would be my top percentage where I think the economy would be okay, and if the Fed would cut rates, everything would go all smooth. But if the unemployment rate continues to go up, and from 4.1% we go to 4.4, 4.6, maybe 5% until September, things will be really, really bad. We can actually speak of a recession, or at least the start of a recession. And given the election years, also that is bad. Usually July and August are very bad months for the stock market. So it's not something new if the stock market will fall at the end of July, beginning of August. It's not, let's say, something that would amaze me in any way. But all in all, I think this warning from the Fed kind of sparks a bit of frightening in the market. This will make the fire be even bigger, and this way we may see a correction in the S&P 500 and all the other indexes like the Nasdaq and Dow Jones, especially the S&P and the Nasdaq, because all the growth that has come from these two indexes are from 5 to 7 companies that have grown exponentially. Some of them don't necessarily deserve that growth, and for example, I'm looking here at AMD because I think AMD is in a very, very overvalued state. Also, Nvidia, I think it's a bit overextended at this point, but this is a topic for another video. What I wanted to discuss is the potential risk of a recession right now because of what Jerome Powell just said in Congress. So crossing that 4% line is a very troubling perspective, given that he also underlined the risks that we are facing because of a job market that is going sideways and the potential lack of rate cutting at the exact moment that we need, when we need a rate cut. So if they cut too late, it will be bad. And even if they cut okay, let's say maybe they cut in September, it's not too late, but they cut too little, like 25 basis points, maybe they should cut 50 basis points. That can also lead to the market going sideways, the economy going sideways. So it's a very I would say troubling moment that we are in, and I think a 10% to 15% decline in the S&P 500 can be on the table going forward until the election period, because let's face it, we have another debate that is coming up in a few weeks. Depending on how things will go with Biden and Trump, we'll again see what Trump's chances are, if they're going even more up, and also depending on how the CPI will look, unemployment rate will look in the coming months, given that the Fed has like a break in August. If everything goes sideways and breaks really fast, the Fed may be obligated to cut rates in September, and hopefully they will do that with the appropriate rate cut. I mean, not just 25 basis points, maybe go for the 50 basis points cut and see from there. I also hope that these big 5 to 7 companies in the S&P fall, correct at a point. I mean, I would see Nvidia correcting a lot. I would at least like $100 per share, going to $100 per share, even lower. And also companies like AMD, Micron, and other companies that have benefited from Nvidia's rise to power also correct a lot with Nvidia. So I think everything is on Nvidia's shoulders right now in terms of correction, because the other companies in the S&P 500 in the economy are not doing great. I mean, they are not the problem right now. Just a few companies, a handful of AI companies, AI related companies are the problem when it comes to the overextension of the stock market. And if Nvidia corrects, I think it will pull everyone with it, and this will kind of, I don't know, bring things back to normal a bit. Also, in terms of economy, I hope if the Fed sees the stock market cooling down a bit, they won't be afraid to cut rates. Because even though technically the Fed doesn't care about the stock market and they don't look at the stock market and how it's performing, I think they actually do look a bit. I mean, they're thinking, oh, if we cut rates, the stock market will pump even more, the economy is going well, because look, the stock market is going well. But the stock market and the economy are not like the same thing. They're not growing at pace, they're kind of delayed. I see the stock market more as a tool to predict the economy, so the economy will get better as long as we don't break it. If we break the economy, the stock market will break as well at the following point. So the thing is that you either try to do well for both the stock market and the economy, or you just break one and the other one breaks as well. So it's a very troubling period right now, I think, and I would recommend everyone to be, let's say, a bit on the safer approach when it comes to investing. So I wouldn't recommend you investing in companies that are already overextended. Again, like the ones that I've mentioned. I wouldn't invest in companies that have benefited from this period of AI boom and so on. I would go and I would invest in the companies that are lagging, are out of cycle, that will benefit from a rate cut. And for example, I'm thinking here of real estate investment trusts, because, well, real estate is very tied to debt, and debt right now is expensive, and the debt becomes less and less expensive. They will benefit, and I think the investors will first look at the first rate cut and think something like, oh, they cut once, they will cut again, so let's start pouring money in real estate. And also I would go to the defensive stocks a bit. So I wouldn't just exit everything that's like the technology and so on, but I wouldn't add more money there. I would find gems that are unpolished, that are out of cycle. Again, consumer discretionary may be a good option. Companies that are very interest rate sensitive. For example, if you bought Tesla under $200, that would have been a good idea. Right now is not like a good time to do that. But you also have other companies like green energy companies. You also have, as mentioned, consumer discretionary real estate companies. So you have companies from which you can choose. But I would be careful with companies that are very sensitive if they cut rates, if the economy starts going sideways, and if we enter a recession. Even though it's a very small recession, they will be hit really bad, because come on, there are companies that went up like 3-4x, so that's a lot. So that's kind of my idea. I think Powell just kind of hinted at a possible recession. I think he hinted that the Fed needs to think really well when they cut, to not be too late, and how much they cut. They never put this on the table. Well, we're gonna cut 25 basis points or 50 basis points. No, they just mentioned that a first cut will have to wait until they feel it's the best time. But now he also put on the table, well, how much will we cut? Will it be 25 basis points? Will it be 50? Will it be 75 if shit hits the fan? So we don't know that. We have to wait. So be careful when you're investing. That's my take for today. If you like the video, if you want to support the channel, it's a small channel, and your like, your share, and of course your subscribe will mean the world to me. So I would highly appreciate it if you do that. So hit the like button, hit the share button, share with your friends, and also subscribe to the channel because it's helpful. And we'll see each other next time. Bye bye, guys.